Hey traders, this is Ron Haidt. Hope you guys had a fantastic day. As always, nothing in this presentation shall constitute a recommendation to buy or sell any security. Trading stocks and options involves risk, and specific financial issues shall be addressed with your financial advisor. All right, we'll kick off here as usual with the diamonds, the Dow ETF, the DIA, and we can see that basically there was no change. It was a doji, another big non-event. What's interesting here is after that hammer back on the 10th, just a couple days ago on Monday, we're just biding our time here. We're not pushing higher, but we're also not pushing lower. These lows continue to hold. If I was trading the DIA or keeping an eye on it, it pretty much is that 250, the 240, 250 area. I'm just picking a nice round number. We close below that. That opens up the door for potentially another wave of selling. If this holds and this is base building, boom, the target is going to be right back up there near 260-ish and then back up to those previous highs. But caution remains warranted. That's going to be the theme across the majors here. We'd say, take a look at the SPY, which I have a bullish position in. Another basically non-event, 9 cents down, but 3 straight days of coming off the highs. But we're also not falling out of bed. Same commentary. What I would consider doing here is watching the 262, 50-ish area. So 242 on the Dow, 262 here on the SPY. We start pushing higher. We go back up to the previous highs. We take a look at the Qs. They were up a whopping nickel, big move. 3 straight black candles, that is not necessarily a bad sign. We're right on the blue line, which on this chart's the 8-day EMA. Watch the low from the 10th, which was Monday, and then back down here. Below that low from 1120, now that would be bad news for the bulls. Good news for the bears. Take a look at the IWM. They did not have a good day. They lost $2, down 1.42%, so the IWM got slammed a little bit. New near-term closing lows. This is what we're watching for in the spiders and the Dow and the Qs. Well, the IWM is doing it. Their downside targets, and I've shown you this in a previous video, we're already at the February support levels. I'd have to go back 2 years on IWM, and the next major target's down the low 130s. Not saying the whole market or IWM is going to get there, but dang, it is not looking good right now. Now, what else isn't looking good? How about the transports, IYT? This is a 2-year daily chart right now, but just giving you context, we're at new, fresh, 1-year lows, target just below 170, another $3-4 lower. You look at XLF, the banking ETF, and it lost 0.73% today. It's below this swing low, so target down in the mid-23s, another $1+ lower. So transports, banks, small caps not doing well, but spiders, diamonds, and Qs are holding in there. Keep an eye on USO. I zoom in here. There was a nice little pop in volume today, but you can see how the red bars are definitely beating black bars. Red bars are down days, black bars are up days. We did have bullish engulfing over yesterday. There was the spike in volume, but we would need to close above something, the 20-day EMA in red. We get above that, then that would signal to me that, okay, we have a potential change in trend here. And because this was pretty much just a slow death, there wasn't a lot of pausing points. Targets the 50-day up at 13. That'd be a $1.50 higher, well over 10% potential move based off technical analysis. 2 stocks that are bucking the trend. Check this out. 2-year chart of Procter & Gamble jumped 2.62% today. Really good volume. In fact, from the earnings gap up back in October, this thing's been riding really nice, holding above the red line, the 20-day EMA. So you can see how the red line here can be a very nice potential trailing stop. It's outside its upper Bollinger Bands, which are those green lines. Those are the 2 standard deviation John Bollinger Bands. It is a breakout. It is overbought in the daily, but because it went nowhere for about a month, it could still keep riding those bands higher. So this one is bullish. Again, I would still consider the red line as a potential trailing stop. We go to Johnson & Johnson. Up 0.5% today, but from a closing high perspective, new all-time highs. This one's also holding up very well right now in these markets. The red line has not been as good a support, but the orange has here recently. I think comparing the two, PG is much more trend friendly than J&J right now. And how about Amazon? I'm going to zoom in here and just show you what's happening. We had a previous high here in November, another one right here. We actually had a little bit of a breakout on the December 3rd, but we came back down the very next day, right, on the 4th. But essentially we have a high there around 1750. We have a new low, but it reversed higher off the lows. And if you look really closely, that 50-day SMA in orange is acting a little bit like a resistance level, which is creating this little pennant. And maybe how Amazon goes is how tech's going to go. Because if Amazon pops out here to the upside on strong volume, That's going to be bullish for the market. We break down out of this little pennant. We go right back down here, 1450. So from where we are now, that's a 200-point drop. From here, we break out to the upside. We clear let's just call it a number there. Let's pick 1770. What was the closing price? 1772. Let's make it a nice 1775, rounded up to a nickel. So $1,775. A close above there, target's up here. Maybe Amazon's trying to tell us something, or not. We shall see, but I'm highlighting it here. Here is Lowe's. 2.37% move, back-to-back strong volume days. We are now pushing higher. The 200-day SMA in purple and the 50-day SMA in orange are both coming together right around 96 or so bucks. We get to 97. We break both of these. That starts to be a breakout, triggers a buy signal. Target's going to be up here. Because it would be clearing the 50-day in orange and the 200-day in purple, I don't consider this swing high to be that big of a deal in that kind of context. These moving averages are much more important. And tomorrow, 12 noon Eastern, trust me on this, folks. You give me 5 minutes of your time tomorrow, I'm going to make it worth it. I'm going to show you stocks that have historical bullish and bearish track records with incredible accuracy historically. It's unbelievable. This particular stock that I'm going to show you tomorrow actually has a 100% historical track record over the upcoming weeks, gaining 23.27% on average. Never had a losing year. Absolutely astonishing. I've also shown you this yesterday. I'll give you the whole hot list of buys and sells of bullish and bearish stocks, all in the first 5 minutes of going live. You can't afford not to be at this event. It's going to be noon Eastern, 9 a.m. Pacific, this Friday, which is tomorrow, December 14th. We're limited to 500 seats. That's when the webinar room locks up. We have less than about 35 seats remaining as I do this video. So please register at the bottom of the video. If you're getting this in an email, register there. It's free, no strings attached. I'm going to show you these hottest proven stocks because think about it. How many times have we bought a stock as a trader, right? A couple days go by and the sucker turns around and starts heading down. And we're scratching our heads wondering, what did we miss? What's that one piece of information that we didn't have at our disposal? I'm going to show you that tomorrow. It's going to change the way you look at picking stocks forever, and I'm not kidding. So again, grab that link at the email, register please ASAP, try to get in there early. I'm going to have the room open about 45 minutes before the top of the hour, and once you're in, do not leave or you could risk getting locked out. So again, look forward to seeing you tomorrow. Have a fantastic Friday, folks. We'll see you then.